Hi folks, Nick here recapping the day 3/11, 2015. Almost forgot the year there. Scoreboard, boring, but very far from boring intraday. We started the pre-open with a huge up, and then we let it go, and we closed a little bit down. Okay, so the Dow is down 27 points. That's 0.15%, 0.19% on the SPX, 0.55% on the NASDAQ. That's mainly because of the heavyweight Apple being red and other few names, and we'll go through that. Apple is down almost 1.8%, actually a little bit more. The bright spot were the small caps. That's 2 days in a row I mentioned that. Today, even more so. It's up 7 points on the RUT, which is plus 0.6% or so. And let's look at the weakness first, where it came from. The NASDAQ was the weakest. You can see Apple, Qualcomm, Cisco, those are the biggies. Baidu, obviously, and Google did not do it any favor. So there was lack of strength, except for Intel, and a lot of weakness everywhere else. The Russell, that's the small caps, that's the bright spots, nothing but green almost. And then you can see the banks were happy. Stress test looks like they all passed. There are a few weak elements there, but no problems there. All right, so as far as intraday action, this is the close. They're not happy. This is the close of the small caps. They're a lot happier. Closes up, right? Versus this is the S&P close, not happy. This is the NASDAQ close, definitely not happy. If you remember, if you've been with me for a while, I've been looking at this level right here, this one right there. This is my kryptonite level. For a long time, it was a lid. It was a lid. We could not surpass it, and then finally we broke through it on our way to, look, see, you can see it was a lid, and then we broke it. We ran to NASDAQ 5,000. Look at that, back to it. Will it become support? That's an important point, okay? So intraday, we had happy early before the open, fizzled right away, bounced right away, meandered, fizzled right away, quickly I should say, tried to bounce, but every breakout opportunity, 1, 2, 3, 4, 5, 6, 7, was not taken. Every breakout opportunity was passed along. Meanwhile, the small caps were waiting for the breakout, waiting, and the indices, the broader indices were not joining it. And then they finally said, we're running anyway. They ran all by themselves. What played parts? A lot of it. The euro, we'll talk about that. But oil, look at that, as if nothing happened. So look at these two candles in oil. Is this ridiculous or what? Boom. Down to like minus 2%, if not more. Boom. This is 1 minute. This is 1 minute. Like nothing happened. It's flat. So it's still playing with fire. I don't like it here. If it loses this, emphatically, it goes to the low 40s. It has the potential to. So as far as we had a nice bounce working in the morning. Wasn't too impressive. Didn't last too long. Small caps were leading. Momentum stocks were hit, but not overly hit, which is good. That means that maybe risk appetite is not completely dead, just on hold for a little bit. Oil broke down. We just saw that, but then it recovered. And then when it recovered, the rates kind of recovered a little bit. So the rates are down again, another day. So now 2 days in a row, following 2 days in a row. Before that, 2 days ago, the rates and markets were going opposite directions. That was something new. It lasted 2 days. And the last 2 days here, today and yesterday, we went back to the old ways of markets down while rates are down, the 10-year rates, yield. Conversely, the TLT was up today, which are the bonds. So, that's usually, they go hand in hand against markets. TLT rises, markets go down. So we were back to the same old, I should say. All right, so the strong finish in the small caps, but not so in the ES and in the S&P and the NASDAQ, and certainly not Apple. This is Apple's finish. Look at that. It put in a dome. It was saved by the bell. It has so many negative formations here. I thought it was going to break the 122s into the 121s, and it just ran out of time. So you know, a little short in Apple could do us good. All right, so as far as what to expect or thoughts on what happened today, if you remember the last hard bounce on the S&P, and I'll prime that, this one right here. we had the small caps lead 2 days beforehand. In other words, the small caps were saying, why are you guys still selling off? Why are you guys still selling off? I see good things. And they ran, and then everybody followed, and look at the rocket ship we rode. So I'm just saying, this is one day where small caps are leading up, saying, why are you selling? I'm running. And look how close we are to the bounce level. Now, that's a double-edged sword. I want it to hold. I don't want it to break down. So tomorrow, if we break down through that, we could be in trouble. All right? We're not today. Volume is not as big as yesterday, but still bigger than 2 days ago when it was green. So the volume is still okay. It's not building. Here, look at the volume was building, or a lot bigger than the recent green candles. All right, so what about the Qs? Is the Qs just as happy? I'm jumping around, so now. The Qs is at a really important point because this is the party hat, I call them, the dome, whatever you would call it. So we need to make a decision. Is this level, those two green lines, are going to be support because they were resistance? Will they become support? If not, we could be headed to here. So just like the ES, just like the S&P, the SPY that I just showed you, this too needs to make a decision here shortly. What about the small caps? Let's see how they tell the story. Small caps, see the dome, just like the Qs that I just showed you. And it's an important level because, look, it's this level right here. This was a lid for the longest time, and then we broke it, and now we're back to it. Is it going to be support? This candle is pretty bullish. They tried to sell it. They bounced exactly where they needed to bounce, and they closed close to the high. So that's bullish. If not, is this area going to be support? Okay, so this is important. These are important. Volume is not as impressive as yesterday, so that's a little knock on it. What was volume on Qs? I didn't pay attention. Pretty strong. All right, so these are them. How about Apple? I think Apple is worthy of note here. I drew a new box, this green box. Why? It's an area that's of interest to me. It had two very fast candles, these two giant leaps up. That makes it like a void. It sucks it back down because it's right in the middle of it. So if it decides to go down, 120 can come fast because of it. Especially that this area also is, you see it right here, it's a lid. It was a lid until we busted out with these two very fast candles. So this area is not well traded, and it may want to be traded. Okay, that's why I highlighted it. So tomorrow it's a little limpy. So if you wanted to pick on something, you pick on the injured gazelle, and that's Apple today. Google, somebody asked me if it's too late to short Google or not. You know, I said this could be a target measured move from this breakout right here, this formation, and some of you did credit call spreads up here, and we did some debit put spreads. We pocketed them, and now the easy work is done as far as on the short side. However, there's still room for the downside if markets continue on down. Look at this. If markets continue on down, it can fall. Okay, I don't have a specific reason for Google to fall unless the markets fall. All right, so these are the important points that I came up with today as far as stocks that jump to mind, and I promised I would share. Other important points, somebody asked me, is this a pause or a rest? Meaning, are we pausing for more downside or are we resting for more upside? You know, there's big money on both sides of those fences. So it tells me that we're going to meander here for a while. So maybe iron condors for the active traders. However, I think that there's also big expectations from some big money to go a lot lower in a short time. I mean, very soon, like in the next couple of weeks. So for that, we can take a couple of lotto tickets, and I've been sharing them with you longer term. So there are differences in the bull. Is this not a bull market anymore? I don't know what defines a bull market exactly. You can slice it any way you want. All I know is that 2013, the bull was so scary. I was short a little bit in the beginning of the year, and I was terrified all year long. You could not short anything. 2014, I shorted all year long, and I didn't sweat much, and I ended up winning with all of the shorts, the big shorts. So it wasn't a scary bull. It was still a viable bull, but it wasn't scary. The bull this year is just completely gutless and not scary at all. In fact, it's easier to be short than long. The long thesis scares me now. So that's the difference. That's important. Okay, variables. I'm going to promote the rate hike / Fed and the euro to the highest of positions there. Why? I'll tell you why. On the rate hike, it's coming. And there are 3 milestones, in my opinion. Number 1 is when the Fed actually takes out the word patient. And that could come as early as next week. I'll check the schedule. Number 2 is when the Fed actually sets the date for the rate hike, which will probably be in the next statement that they come out with. So let's give it another month after that. Thirdly, when the rate hikes actually kick in. So we have 3 potential freak out moments in the markets. Probably the first 2 will be more impactful than the third one. And the second part is the euro that I think is also very important. Now that works against the bull thesis. Right now the euro is at its lows. It's crashing. I can visualize it as using the FXE. That's easy. Parity is about 100, right? So 1-to-1 with the dollar. And this is the euro against the dollar. So now everybody, oh, it can't go to parity. It can't go to parity. Really? I mean, what would stop it? Look at the decline. Why would it want to stop at parity? I have no idea. Neither should they. I mean, they have no idea. They're just saying it. Okay. So, why do I mention that? If you read or you listened or you heard about that people talking about all the earnings reports, all the multinational companies said they've been hurt by the euro. They've been hurt by the euro. They've been hurt by the euro. And that was when the euro was here. So if they've been hurt by the euro on this move, okay, so euro is coming down to parity and then some, so there's going to be more hurt. Have they priced in that hurt? If not, we have another leg down on the next set of earnings. So that's another whoosh down. Greece, I don't want to talk about. QE in Europe, not until Monday. Oil, we already talked about it. Let's look at it in, we already did. And that was oil. TLT, TNX, okay, let's look at those two because those are important. So the TNX, that represents the yield. Remember the yield resistance on the 10-year? It's back in play, baby. I don't know why, but it's back in play. So the markets decided that they did not want to break out. And now we say, okay, so do we have any other levels we want to look at? See, there's a confluence of levels all pointing to this area. So it's a fight. The other side of that fight are the bonds, and they move in opposite directions. They bounced here. They lost it for 2 days, but then they bounced up the 126 level. And now we could be breaking this upward, and maybe 130 is next, maybe 131. Let's put a line here. Okay, those are the bonds. If bonds rise, markets fall. So this would not be good for markets. So that's an important part. All right, ranges. We already talked about the ranges. I showed you pictures. Perfect candle today. I already shared with you on the let me see here, the IWM. I think we looked at it from the RUT perspective. So let me see if we can quickly pull up that. I think we already did the IWM. Yeah, we did that. Okay, never mind. I take notes. I got to make sure I don't lose any of the notes, people. All right, let's see here. There's more talk about lumber liquidators. I don't care. Price line, yes. Let's talk about price line. There are some short positions in there that are nicely profitable. Somebody asked me how far can it go. Today it had a hideous candle, down 1% and change. I said, well, it's in this green box right here, this whoosh, that's an open gap. It's right here, right in the middle of it. And markets like to close gaps, and maybe they're headed down to 1130. If they are, that'd be great for those who are holding shorts in price line. There is a lesson to be had today, I think. The lesson is a moral lesson. Throughout the day, there were a couple of setups that were fake outs for the bulls. And those are the guys that, let me see here if I can click on it and come it out. Nope, it's not working. But anyway, the technical analysts, purists, look at technical formations and they decide a move this way or that way. I think that they need to broaden and be open and at least accepting, and they usually are not, of other signals and have another extra window that normal people look at, because there were hints that they were going to be fake outs, and let me share a couple with you. Okay, I found them. Okay, here is the fake out intraday. Every candle's a minute in the SPY. And right here, there was a fake out breakout, and you can see people tweeting, "Oh, fake out confirmed." I mean, breakout confirmed, and they would have chased it up from here, whereas the market just meandered and decided to sell off. That was one. Here's the mirror image of it in the Qs, which are the NASDAQ. So the other one was the S&P. But had they looked at everything, momentum, other stocks, chatter, gumption, volume, whatever, they would have seen that there was so much hesitation that you would need to at least see confirmation, good, strong confirmation, before you step in and buy long. Anyway, hopefully they didn't get hurt too badly. But that's the lesson for today. So don't be so obtuse to where only your method works. Be open to other methods. And just today I had a long conversation about trying to learn something new from somebody else. So just be open with that. All right, Nick signing out, 15 minutes.